name is Bala. I'm from Intellect Design Arena. I live in bright, sunny, and sometimes very hot Texas. So it's always a pleasure to be in Toronto. I come here pretty often. We do a lot of work in the US and Canada. Very interesting topic for today. We're going to be talking to you about our viewpoint on contextual payment. I'd like to take you through a little bit of a journey around contextual payment. This is a concept that we've been talking about for a while now. And the way we would go about it is we look at a what part of it, define what contextual payment context is all about, and then move on to contextual payment. Why exactly are we talking about it in today's landscape? Who's involved in that life cycle? And how exactly can institutions take advantage of what's happening to be more creative and innovative with respect to contextual payments? So if you were to look at the what, I would like to start with a small story here. Like I said, I live in Texas. Of late, in the last few years, Texas has been growing a lot in terms of a multi-communal experience around the place. So I've been living there for about 6 years now before I moved there from the East Coast in the United States. Many weeks back, me and my family went for dinner at a Korean restaurant. Okay? Very interesting place. We were midway through our dinner, and the owner of the restaurant walked around asking us how the food was, like any other good restaurant owners tend to do. And me and my wife were being very nice to the guy. He just said, okay, the food is good, the service is good. The first thing that my daughter did, a 17-year-old teenager that she was, the first thing that she asked was, I see that you're playing American rap music in a Korean restaurant. So my wife was like, really? I was like, oh my God, I have to pay a bigger tip. And the restaurant owner was very nice to us. He said, you know what, I've been living here for the last 5 years. When I first came to the United States, I wanted to bring the flavor of South Korea to the United States. And I started this restaurant with that intent. And I used to play traditional Korean music in my restaurant all the time. There was a day in a restaurant when his granddaughter accidentally changed the music in his restaurant to, I believe at that point it was jazz. And he just let it go because he didn't want to disappoint his granddaughter. And over time, he said, why don't I experiment with newer types of music in my restaurant and see what's happening, all right? So he did that. And what he did was he also accompanied that with a little feedback form asking people, do you like the music here? Simple question, right? So he did that for a month, and he found that every time he changed music, the opinions changed, right? What he also realized is the volume of people talking in his restaurant increased when certain types of music was being played. So he went and asked people, so what's happening? When I play rap, why do you guys speak louder? Is it because the music or the volume is high? He said, no. The reaction was, we feel like dancing to the music, all right? So one thing led to another. Long story short, this gentleman then started a trend in his restaurant, basically saying that every week would be a different music theme. And over time, he analyzed that any point in time he played rap or jazz in a restaurant, his sales spiked, people's turnover increased, and the tips increased as well, okay? And then when he played Korean music, he said he was 50% down the line. He said, you know what, end of the day, what my customers like is what matters, and I need to be contextual, okay? So that essentially is the theme of what we're going to talk about today. It's all about context. And what context does, and this is not new to all of us, right? We all know what happens. Every day in life, we deal with context. What it depends on is the circumstances that you're in, the data that is available to you. Think about the restaurant owner. He did his homework. He collected the data, the information. He found out what his customers demanded. And that essentially is what context is all about. So we are here in Toronto, Canada, the last 2 days talking all about payment. So why not payment, right? So with that defined, we know what contextual payments is all about now. We're going to go a little deeper and say why exactly are we talking about contextual payment. I'm sure you guys have been a part of a lot of discussions in the last couple of days. You heard a lot of people talk about trends in the market. There's a phenomenal change and a shift happening in North America. Payment modernization is all over the place. You know all about that. I don't have to explain every data and statistic to you. It's out there. It's realistic. It is out there for real. That payment volumes are significantly increasing, which basically means that the amount of money that is out there to be made by institutions is also significantly increasing. And institutions like banks, other financial institutions, institutions which provide solutions and services to those bank NFIs. So it's out there. It's a realistic thing. There's no debating what's happening out in the market. So increase in volumes of transactions automatically increases liquidity in the market. So stability, everything else falls into place as a cascading effect. Okay? So with that said, what is it really creating? Okay? It's creating a new art of the possible. The art of the possible is simply defined today by the difference between how many of us did transactions back in the 80s, where I would believe about 90 to 95% of us did not even know what the term online transfer meant at that point in time. Today, it's a given for my daughter. My daughter, if I use the term check with my daughter, she doesn't even know what it is, right? Unless there's a specific reason for using a check, right? So the ways in which we can do payment is significantly changing in the marketplace. I'm not here to educate you on that. You guys know that already. But what it means is, along with that, come with changes in the level of security involved. So along with that comes an experience that is involved in how you see the payment transaction getting processed. You don't want to enter 15 different fields or 15 sets of information to process a simple payment transaction from one person to the other. Many of you using online payment systems like Zelle know already that you can just make a transfer today using an email ID. So the options are increasing significantly. And why exactly is it happening? Payments modernization is a buzzword. We all know what's happening in payments modernization. The United States has already put in a task force. It's implementing real-time payments. Canada is doing it significantly through the RTR mechanism. Many countries around the world are following suit. It's not unusual. It's the new normal. Okay? So payment modernization is in. And what is also happening as an underlying reality here is the fact that there are customer segments being impacted. A huge percentage of volumes today in payments come from the small and medium enterprises. Okay? That particular segment has been a little bit of undeserved for a while, caught in between the corporate and the retail. Many of you would realize, probably there are some bankers around here, who probably know that you've been servicing your small and medium enterprise customers either on the retail segment, and if they move really big, they move beyond a certain level of volumes and revenue, then you promote them into being a corporate customer. They've never been a very, very unique identification for the small and medium enterprises. That's happening. So basically what it means is that there's a thinking around a segment that is significantly changing. And due to that shift, there is the whole experience which was typically attributed to the customer or the consumer from a digital experience standpoint is now getting promoted into further segments, which means the SME customers, the corporate customers are demanding a much richer digital experience. So I term this as consumerization of the commercial in the digital space. Okay, that is essentially what we are seeing happening significantly in the market space. Now, having said all of that, a very new trend that all of you must know about is where competitors are now turning into collaborators. The term for that, many of you would have heard it over and over again in this particular event or other events. It's called open banking, right? Simply opening up the reality of information available across competing institutions to provide a collaborative mechanism of services in a partner ecosystem is what open banking is all about, okay? So again, if you were to combine all of this and also take into consideration that here in Canada, all of what I said just now is also being significantly propagated by the government, the FIs, the fintech, and all of the players in the ecosystem. What it essentially means to the payments world is simply that banks now need to elevate themselves from being just a payment executor and take advantage of what is available to them to ensure what we call as stickiness. And stickiness is simply the ability to make yourself the principal banker of your customers. Okay? Most of you know that on an average, every customer tends to have multiple accounts in multiple banks. But what is it that you need to do to convert that stickiness to make sure that you are the primary banker holding at least 75 to 80% of your customers' holding? Okay? And that, ladies and gentlemen, helps us introduce you to what I would like to call as the shift left era for payments. Is the term shift left familiar to everyone here? Anyone who's not familiar with the term shift left? Okay, come on, please. So let me spend a minute quickly introducing a shift left concept. It's actually quite peculiar because shift left is a terminology significantly used in the technology space in software development. It's simply the art of moving your testing cycle to an earlier point in the execution of a software delivery life cycle. It's as simple as that. Okay, shift left. So that's a simple, definition of what we're doing here. So there's something called a shift down too, and I'm not going to talk about that right now. You can look it up on Google or any of your search engines. But shift left is essentially what we think is going to significantly change the payments world for banks and financial institutions. So today, being a payment executor is what banks do very well. Now, move yourself one step prior to the process and become the enabler for the payment and not just the executor. And the key to doing that is simply one simple magical solution, which is data. Everyone is essentially focused on how do you farm data. So leave aside the gold rush that happened in the early 1900s. This is a gold rush of today. Monetizing information, analyzing information, and converting information into insight is where everything or all of the action lies. Okay? So basically what we're talking about, and this is not just me talking, everyone, including the large big fours. I happen to be working with one of them myself a few years back, and there's no debating the fact that data is the new gold mine. Okay? And having data is just not enough by itself. You need to mine that information, leverage it, and convert it into the contextual. So go back to my Korean restaurant owner example. So he did it by converting the data that he had into a context that worked beautifully for him. He did that. He used his intelligence to do that. What we're talking about in today's age and time, we have a whole bunch of tools. If you were to shop on an Amazon website, you know what happens in that experience. You shop for, you forget shopping. You even search for one item one time on an Amazon website. Every day you're reminded of that fact over and over and over again, right? So that's essentially the stickiness angle. That's essentially using data that is available, and that is using that to convert it into contextual intelligence. Make sense? So with that said, if I were to quickly summarize what we just discussed, the why part of contextual payment, it's fairly simple. Volume's increasing. There are a lot of new ways to make payments today. Payments is just a starting point. So it means if you use the right kind of data available to you, contextually convert that data into the right types of contextual action, that is the key to unlock better customer experience on one side. But more importantly, for banks and financial institutions, it's a key for you to unlock better revenue patterns for your organization. Okay? So with that said, who's really impacted by this? Okay? So everyone might say, yes, it is the customer, it is the bank who's influenced by it. It starts a little prior to that. So the equivalent of my Korean restaurant owner in a large bank or financial institution is this whole age-old war between business and technology. Okay? Everyone is aware of that. So business has always been demanding. It's everything that I'm talking about. It's not entirely new. We've been living that for the last 15, 20 years since we realized that data is powerful. So business has always been asking technology for information. It could be from an operational reporting standpoint. It could be from a pure customer needs analysis standpoint. It could be from a market viewpoint standpoint. It could be anything, right? They've been asking for information. But one of the many, many researches that is available in this area clearly indicates that business has not been getting the right type of input from technology that they can convert into insights. And that is very, very true in the world of payments as well. Okay? And the way it impacts these organizations is there's a very, very important flow as it applies to a value chain between customers and the institutions providing services to their customers. So simply said, the customers like to do things at a reduced cost. Okay? It's as simple as that. But on the bank side, I mean, they don't have a problem with decreasing that revenue because of reduced cost, but they want to increase the volume because that's where their money lies. And operationally, if you look at this, customers would like to initiate a transaction that just gets processed magically, automatically on its own without any human intervention. So do banks. Banks love that. They do not want to have armies of operation people sitting in wire rooms manually picking up each and every transaction and trying to push it through just because the customer forgot to enter one particular field somewhere in the payment instruction, right? Anyone who has been here in a wire room in a bank would appreciate what I'm talking about. So Canada, on one side, is much, much better than your neighbor who, in terms of number of incidents that happen with respect to transaction repairs. Okay? So wire transactions have a much better processing mechanism. They're much, much easier to process in terms of repair situations as compared to ACH transaction. Okay? Like I said, Canada is much better. The US has a significant level of repair situation. So what it essentially means is that the ability to automate based on data available, the ability to achieve true straight-through processing and true straight-through reconciliation is a very, very important piece that significantly increases the ability to process transactions real time, at the same time decreases the operation cost for the institution. Okay? And if you were to combine all of this, the magic behind it is probably two words that I'll talk about a little bit more as I move forward, which is best next action and best next offers. So hold on to that thought with these two terms, and I'll come back to them in a very, very short amount of time. Okay? So with that said, let's actually talk a little bit about how this is likely to happen. Okay? So one, there need to be creativity. There need to be flexibility in terms of how we mine the information. So if you were to categorize utilizing data from a point of view of contextual, you can break it down into 6 important elements. Okay? And it is undebatable that every payment transaction has all of these elements involved, regardless of who is making the payment or the amount or the segment that that customer belongs to. So what is the purpose of the payment? So why are you doing the payment in the first place? Are you paying off an invoice? Are you making a purchase right now? Anything. Who is initiating the payment? Me, customer. The context in which the payment is happening. So here lies the difference. So what if I was a person making a payment for a perishable product? So think about it. If it's a perishable product that I'm purchasing right now, I have a level of urgency. Or if it's not, if it's a product that I can wait for a few weeks on, it means I don't have a level of urgency. Okay? Every act that you do for a payment has an implication with respect to the data accompanying that particular action. Okay? Now, where does the payment need to go? Is it a domestic payment? Is it an international payment? Is it a payment that you have to make within a certain amount of time because you want to take advantage of increasing or decreasing foreign exchange rates? Those attributes matter significantly. And when does the payment need to complete, which is basically how do you want to settle that? When exactly do you want to settle that payment? And using all of this information to finally determine how that payment has to happen is where the contextual journey leads you to. Many of you may be familiar with a term that I've been hearing a lot in this conference, which is smart routing or intelligent routing. Okay? So that essentially is the starting point. Smart routing or intelligent routing, if done correctly, would take all of these attributes into consideration to determine the best way to make a payment happen. Okay? So with that said, the key is simple. Everyone's familiar with ISO 20022. We started with the older years when we had 5775. We evolved it into 15022, and now we have ISO 222. So simply speaking, the world has opened up in terms of the amount of data that can accompany any payment. It's not just about saying, I'm going to make a payment of X dollars on X date to this person. It's beyond that. Invoice information can accompany payment data. Okay? Detailed account receivable, payables information can be derived out of that data. Okay? Everything that we spoke about, what is the payment for? Where is it going? Between what currencies? When does it need to settle? What is the fee that you're going to pay for that? Can all be derived on basis of the information that is available at the ISO 222 level. Okay? That's the simple key. So which means institutions need to evolve, and they need to use this information to mature the way in which they mine this information and derive context out of that. So let's spend just a couple of minutes here, actually more than a couple of minutes here, in understanding what used to happen. Okay? A lot of you may be familiar with the contents on this slide. So we used to have a concept that we traditionally called as omni-channel. So term familiar with everyone? It's a very familiar term. We used to be familiar with that. Now think of it in a way where you had a FedEx experience. Okay? What happens when you're trying to ship a FedEx box to a different part of the country or a different part of the world? As a customer, I would select a payment route. In the past, that used to happen. I would select how I make the payment. I said, OK, I'm sending it by FedEx. And I would also say I want to ship it overnight or 2-day or 3-day by road, whatever. These are the options that I had. And then I just slapped the label on top, dropped it at the FedEx store or any other location. The FedEx office would scan the label, put it in the truck, and it's gone. Okay? Pretty much how services happened on the banking side when omni-channel was enabled. So basically, from a self-servicing standpoint, we enabled online banking channels, or to a certain extent, even mobile-based application, where a customer could initiate a transaction, boom, done, and we post the transaction. This is what used to happen. So the beauty of this was we, at that point of time, gave the customer different ways in which they could do these transactions without having to walk into a branch. Familiar with that story? Right? So let's move on to what's now happening. So essentially, we are moving into a paradigm where we set aside the omni-channel experience, and we are now getting a little bit more intelligent into what we call as transactional information-based processing. Now, this also happened in a FedEx world. Okay? If you walk to a FedEx or a UPS store, they still ask you certain questions. Right? They still have the same services. They have not changed their services a bit. They still have your overnighters, your 2-day packages, your whatever, by road. Everything is still available. But if you are at the right outlet, they would ask you one very important question. Say, how urgent is this package to be shipped out? Okay? Is it something you want to? They ask you that question. So the response to that question is an intent of the customer. So you got some information coming in. So you got information about the intent coming in from the customer. And basis of that, you are now able to recommend to the customer that you can choose either a cheap route or a fast route. I don't want to spend a lot of money. Fine. I want to do it with a 3-day or a 4-day shipping. But I got to get this the next day. I got to pay more and get a faster mode of paying, which obviously it's going to cost me more. The rest of the process is still the same, right? You're still putting a label on the package. You're still scanning it, sending it away, which is all good. Okay? Move on to the shift left part of processing. The information that is required for processing that particular transaction has, again, we have a box. We say, look into the box. Okay? So look into the box, because the whole idea is the intent of making the payment, the context of making the payment, and using that to determine the best way to execute that particular shipping is what matters now. Okay? Now, one of the things you will notice here is, as opposed to the earlier picture where the customer was on the top of the pyramid and the core banking and the various solutions were at the base of the pyramid, you see the pyramid inverted. There's a reason for that. Because the focus earlier was providing a lightweight online banking experience supported by a heavyweight core processing system. Because of the way in which we are evolving from a transactional analytics standpoint, we now inverted the curve. We're saying the focus is on the customer and the needs of the customer, driven by the interaction that is happening between the institution. So there are two stages there: enabling that interaction to happen, using the information from that interaction to derive the context of that particular interaction, and now converting it into the action. So here, ladies and gentlemen, is the shift left that I was talking about earlier. Okay? And that essentially is where organizations need to move if they really want to take advantage of where the market is headed and the kind of tools that are available out there for you to derive this information and convert it into the right, quote unquote, contextual payment experience. Okay? When it comes to implementing it, so now we spoke about what's happening, what is the key to doing this. We spoke about getting that information, and we also spoke a little bit about trying to get a little creative about it. Okay? So now we talk about how exactly do you do that? What are the possibilities that you could implement that could make this a much more realistic situation? Lisa is the owner of a business that actually manufactures 3D printers. So I've got a quick word from Lisa here. I'm going to step out for 4 minutes. We could listen to what Lisa had to say, and I'll take on from that point. We good on the audio? Thank you.
Okay, I'll sort it out. Call you back. I've got this great new AI-based 3D printer launching in Singapore. Will make us a fortune. Hotel for the launch event is demanding payment. What's this? Got 6 Sing dollar invoices due by the end of the month, and no Sing dollar account. I hadn't realised we'd spent over 125K. If the pound goes down, it'll cost me. That rate's volatile. Hang on. It's got a few ideas. Give me an alert if the rate changes. It's free, but it would be a bit too late. Forward contract. Buy the dollars now for use later. That'll work. Oh, and it's even suggesting I could open a Sing dollar account. Good idea. It'll be worth the extra cost as I'm expecting a lot of business there. My bank is really actually helping me. So, the sale of one of our factories just deposited 11 million in our account. Earning what, 0.5%? No way. But it's suggesting I'll get a better rate if I move it into a money market fund. I'll get another 21 basis points immediately. Let's do it. I might as well go with the 6127. And it's suggesting I speak to the investment team about a planned strategy. Done. Great. I'll need that money to ramp up production, but at least until then, it can earn its keep. It's the big launch today. Good morning, Alexa.
Good morning, Lisa. I've noticed 5 overdue U.S. invoices, but insufficient funds to pay them from your usual account.
Uh-oh. One of them's to pay that blasted hotel. Well, I don't want to cash in my investments, but if I don't pay now, there'll be no launch.
There are sufficient funds in your U.S. instant account as well as in your U.S. dollar account in Germany. So your options are: borrow from us at 1.5% PA, withdraw from your U.S. instant account, losing 0.5% interest PA, or create an intercompany loan from your German subsidiary's U.S. account, losing only 0.25% interest PA. The recommended best next action is an intercompany loan from your German operations at a £12 fee. Shall I proceed?
Yes, please.
Okay, US dollar intercompany loan at 1 week, LIBOR plus 0.1%, to be repaid within 30 days. Please confirm.
Confirmed.
All set up. Lisa, should we always handle shortfalls like this automatically?
Absolutely. Brilliant. My bank really understands my business. It gives me alternative solutions that make sense. I can't believe I'm paying more fees to this bank than ever. Yet I just love them. The launch was great, and the 3D printer's been a huge success. Orders are coming in thick and fast, and my bank's already assisting me with collections. Our finances are in great shape. It's a weight off my shoulders. Now I can focus on launching our printer in the US. This is the only bank for my business.
Well, that part about paying more fees, I'll just keep that silent for a minute. But you know what? On the other hand, she's probably not paying as much fees, but what she doesn't realize is that she's creating significant liquidity for her bank. The cash flow is significantly increased for the bank that she's working with. Anyway, so interesting video, but I wanted to get a little bit more into details into what this experience was all about, right? I know we are here talking about contextual payment in a payments conference, but the world of possibilities is phenomenal, because a payment to us is just a starting point. And everything that you do contextually with respect to a payment leads to a wide range of possibilities. Let me spend a few minutes explaining what this is all about, okay? So contextually, if you look at a basic payment experience, so what you see on screen here is a simple, hey, a payment is coming up, kind of an indication, right? So obviously, every institution has a list of some sort of payables that you have history about. You have some information available that tells your customer, hey, the payment is coming up. You got to pick something up and make a payment. Fine, nothing contextual about it. It's a list, it's coming up, good, I know about it. But the next step is when I pick up that particular payment, the experience that we were talking about earlier, okay? The contextual around various attributes of information that you collect to make sure that you have, quote unquote, the right type of data to derive contextuality, go through an experience. So what you see here in this top band here takes you through an experience that talks to you about the what of a payment, the when of a payment, and a how of a payment. It's simple. So we talked about what are you transmitting, amount in US dollars or Canadian dollars. This is the amount I'm transferring. I want to transfer it today. I want it reached tomorrow. And how am I transmitting it? Basically, that is a part which you see in terms of the contextual experience, because basis of the information provided, you're now able to say that you could choose from different options. It could be a Fed wire, it could be a chips, it could be an ACH here, it could be any, you want to send it to Interact, you want to use links, any methodology that your bank provides would be the option. And now you have the ability to advise your customers on what is the cheapest mechanism available out of that, the fastest mechanism available out of that, and what is the experience in terms of the adaptability of that payment mechanism. So how popular is that information? Now this gives to me, as a customer, a single view of what is my possible best next action. So one of the terminologies I was talking to you about is essentially best next action. So it tells me, guides me as to what my action is going to be. I have had a few people ask me questions about what are the legal implications around it, okay? So we're not forcing the customer. We are not automating anything here. So what we're saying is that we are advising mechanisms available to you. Because in the absence of this information, as a customer, I would have had to go to 10 different web pages on your website, on the bank's website, to find out what's the best mechanism of making the payment, the amount that it's going to cost me, and the time it's going to take for that money to reach the person I'm paying, right? So giving all of this information in a single spot helps me understand information about the client and give a contextual experience that allows them to choose the payment. A lot of banks today in Canada and other countries are doing this. They use the term smart routing or intelligent routing to indicate this mechanism, okay? Now let's go a little further. Now at this point of time, I'm trying to make a payment, and I do not have the money available. So typical terminology for that is a shortfall. So here is where we take it to one additional level of contextuality. So I don't have the money. Most typical experiences, I would drop the transaction and try to find out ways to fund that account and then try to do the transaction again. Contextuality can take it to the next level and now give the customer not just the experience of the best next action, but also the best next offer in this case. So what if, as a bank, your product managers would like to say that if my customers in these SME segment have a shortfall at the time they're making a payment, I would give them a small credit facility, a working capital, for 10 days at a rate which is 1% lower than what I would typically offer them, just so that they can complete that transaction. Okay? That's the next best offer. And all of this in a single experience. So you're not moving away from the transaction processing experience for the customer. The stickiness is still there. Your customer clearly gets various options to choose from. And one of those options is clearly a revenue generating model for your bank. Okay? And now take this a little bit even further, because we're not talking about doing something at the point of time in an event. What if you could be a little proactive about it? Okay? Most banks have the ability to gather information about historic or future payments that need to occur for a customer. So basically, I have information on invoices that I need to pay at a later date. So what if I use that information to determine that I have a quote-unquote potential shortfall for a future date, and now tell you that you're going to have a shortfall to make a payment, what would you like to do about it? Okay? This is where contextuality takes it to the next level of being highly proactive. And there could be different actions associated with that event as well. Okay? Now, there's no sacrosanct rule that tells that a bank has to provide 10 different options. You could choose the options that get exposed to the type of customer that you're servicing. Okay? Again, even in this scenario, you have something like a best next action or a best next offer. So in this case, an example of a best next action could be, you know what, I'm not worried about it. I know there's going to be money coming into my account later. Just remind me one day before that. Simple. Okay? Or I might want to say, I have some invoices. Let me work with the bank's supply chain finance team and discount some invoices so that I can make the payments on time. Again, the world of possibilities is open. It's up to financial institutions to tap that information available to you to derive the contextuality. And that is essentially what enhances the digital experience for your end customers. Or let's flip this around. Let's not talk about a payment for a minute. What if I have excess money available with me? I have funds that I'm not going to be utilizing for the next few weeks. So I might rather invest that money, right? Again, we're not forcing the customers to do anything. We're just giving them guidance, a reminder that you have some float available with you that is best utilized in an investment if you want to use it that way. Okay? Or look at it from the point of view of, let's say, a cash manager within a large corporate who is probably want to group a bunch of his accounts from a liquidity perspective and derive interest based on a collected aggregated balance, and he wants to distribute that interest to various accounts within that corporate entity. So a lot of you who come from a liquidity management world would understand what I'm talking about, because this is a very complex hierarchy that corporate treasurers like to keep to derive the maximum possible interest income from owning a group of accounts. So what if, as a corporate, I want to have the contextual mechanism to determine how should I split this money across these corporates? Or for that matter, how should I collect money from various subsidiaries that work under my corporate umbrella? Okay? And last but not the least, one other example could be managing cross-border situations. This was exactly the one that you saw in the video, where we had Lisa looking at a situation where she did not have enough Singapore dollars to make a payment, And she basically said, at this point of time, she just wanted to create a rate alert, right? So she doesn't want to do anything specific about it right now, but she wants an alert when the foreign exchange rate goes up or down so that she can take necessary action. Or you as a financial institution can say, you know what, I can give you a forward contract mechanism so you can plug in a rate now and utilize it at a later point in time. The possibilities are endless. So bottom line is, payments is the starting point. Contextuality in payments has multiple levels to it. Doing something like intelligent or smart routing is just a starting point, but the possibilities are literally endless. Okay? So if you were to do all of this, any technology person would understand that it takes a good amount of work to put this in place. So a lot of institutions already have significant investments in their technology platform to enable all of the transition that I was talking about earlier. So remember when I was talking about moving from a traditional model to a content or a basic contextual model, and then moving on to a more intelligence-driven contextual model. A lot of institutions are doing a lot of work to get themselves to that point. But there has to be a clear paradigm shift in the way in which architecture, technology, and business come together to determine business priorities on one side and a change in the technology landscape on the other side. A typical architecture could look something like this, where you could have your various initiating channels at the top. This is something we've always done, omni-channel, opti-channel, all of the terminology that we've been throwing around in this market for so long. We know what's happening there. Okay? So everybody's getting a digital experience. Everybody's happy about it. And if you move down that particular picture, especially when you look at it in the world of payments, orchestrating a payment, managing a payment, routing a payment, wire room transactions, we know what's happening there. There's no problem. Life is getting better in terms of processing payments. So the opportunities that I mentioned about earlier are getting realized. Banks and institutions are putting in payments hubs. They are putting in mechanisms to automate their processes, workflow mechanisms, rules engines. Everything is in place. That's good. So what's missing is contextuality. And that essentially is the area where some institutions have started thinking about it. Some institutions don't even have a clue about it. So having said that, the key elements that come into this particular component would essentially float around enabling the mechanisms for intelligence handling. So mining that information, deriving the context out of that information, identifying payment rails intelligently, routing, decisioning, intelligent healing of transactions, especially in situations where you have failures or repair requirements, and then using all of this information to achieve all the exciting possibilities that we spoke about in a short while back is where the secret lies. Okay. So in bottom line, the conclusion is fairly simple in our mind. It is possible. There are possibilities out there. Banks are beautifully positioned today to be able to anticipate what their client needs are. They have a wealth load of data available to them, both in terms of historical patterns and in terms of active transactional information. So they know what the customers are trying to achieve. So simply speaking, deriving that information and converting that into context is simply something that can achieve both what the bank requires and what your end client requires. Okay? There are different strategies available. The way this can be implemented for different customer segments across, starting from your consumer to your small businesses to your corporates, it can completely vary, and different type of institutions as well. And we all know very clearly that the market has significant changes and modernization opportunities that are leading us to that possibility. And last but not the least, technology is the enabler, and it always will be, to help us achieve contextuality in its fullest form. So with that said, thank you very much for the opportunity. We are Intellect Design Arena. our IGTB in short. IGTB stands for Intellect Global Transaction Banking. We are headquartered in London, United Kingdom. We have offices here in New Jersey and Toronto. And happy to take any questions from this point forward.
Thank you. The example you showed and the flow you walked through are quite interesting for contextual banking. The example, is, I guess, had an underlying assumption that Lisa, which was the name of the actress, had single authority over the account and use of funds and all the forwards. Have you solved or have ideas when it's more than one to sign, which account? How do you authenticate who can speak to Alexa and give instructions? Excellent
question. The broader term that we use for what you just described is called entitlements. So the way it works is, obviously, the example that you saw, this is a slightly bigger than a medium enterprise, right? So not a whole lot of employees involved in that kind of an organization. So basically means that a person like Lisa is significantly the CEO and the CFO put together in one go, right? That's the reason you see decisions being made like that. But that's definitely not going to be the way in a corporate organization. So what it means there is that from a whole architecture standpoint, there has to be any contextual banking platform should be able to provide not just the experience, but also the ability to categorize the right kind of activities, authorization levels, and controls as applicable to different levels of users within the organization. And to go with that entitlement mechanism is also the complete workflows that are associated with that. So basically what it means is that the same decision that you saw a person like Lisa making instantaneously for, let's say, applying for a particular facility at that point, is not necessarily a single person decision. In a large corporate, it could actually be routed through multiple people. So Bob can pass it to Phil, and Phil would approve it and pass it to Steve, and Steve would just be the final approver. And all of these interactions can actually happen in a matter of a few minutes on their mobile devices. Okay? So entitlement is the key.
So I actually have, hi, I'm Gene. I actually have a question from the other side of it, which is, banks are not set up to do this. So the loan desk is not set up to deal with microloans. It's not set up to provide this data, et cetera.
Exactly.
So there is a business process re-engineering that needs to happen. The systems are not set up to talk to each other like this and to make these decisions. So can you talk from the practical experience of your company, how you've been able to use your products to breach the silos and work with banks to make the vision happen?
Excellent question again. So we call this dealing with legacy, right? So what happens essentially is there are different forms of legacies that we see and different types of institutions. The larger the institutions get, the more complex their legacy platforms, right? So the way we see it's happening is when we work with institutions where there's pretty much a plug-and-play experience, a lot of things are API-enabled, and a lot of information flow is centrally maintained. We don't really have much of a problem because we fit in very well in between their channel layer and their core processing system. So we're able to, pardon me? I'm sorry, we can add. Not all of them have that ability, but some banks do, okay? But there's the other side of the spectrum, which is where your question comes from. The other side of the spectrum is a bit tricky. So basically, the way we like to deal with that is take it step by step. The way they do it is they put in a level of prioritization that are driven on one side by their business priorities. They do not do or they do not implement all of their business innovations in one go. They take it one step at a time. So to give you an example, we are working with institutions where they are just stepping in to do basic contextual payments as a first step exercise. So what it means is that they would just take in information like who's transferring the money, to whom, and what amount, and it needs to settle on what date. And all they're going to do is say, you can select from A, B, and C as a contextual rail. Okay? Now, the ability to do that, to your point, needs some basic information that needs to come to me from that experience of initiating the transaction, which we control. or the channel layer the bank would control. We are not dependent on any kind of downstream application to provide data to make that determination. So we have the business rules and the workflows within ourselves. So that's the reason why we take it step by step at institutions of that nature to evolve them over a period of time into contextual payment. One important point I want to make is contextual is not an overnight change. It is a transition, it is an experience, and depending on the level of maturity of the organization that we work with, we set the pace accordingly. To answer your question, sir? Any other questions? Very good. Thank you very much for your time, ladies and gentlemen. Signing off from IGTP. Thank you.